All right, good morning, good morning, good morning. Today is July 29th, 2024, and today's the live stream. Welcome to the live stream. So for today, let me take a look at the economic calendar. I do believe there is no news today. It is a NFP Monday. Yep, no news. All right. So let me get this thing started here. Okay, so I do want to talk about dollar here. So notice how the dollar here is now pricing higher. Um, I stated in my weekly forecast. Uh, we were trading between two weekly inefficiencies. It was the weekly BISI here and the weekly SIBI. So now we're trading inside that weekly SIBI. I want to see how we react to it. But I did have targets as this July 12th high of day here, and which was also the daily fair value gap low. So I wanted to see us attack that, and I stated that during my weekly market outlook on Dixie. All right. So now that we've taken, now that we've entered that weekly SIBI and taken out that daily fair value gap, or entered that daily fair value gap at least, now I want to see how we react from here. Do we, displace lower, or will we disrespect it and price higher? It all depends on what we do there, but as of right now, I'm gonna be just watching and to see how we close, because I do want to see if we are bullish on the dollar, we should get a daily closure above this weekly SIBI, and once we get that daily closure, then we can trade intraday models on NQ. So NQ, my target here coming to this week was July 25th low, because I did want to see us rebalance this daily fair value gap. Like on the daily time frame right here, prices, it looks like prices are willing to retrace back inside this daily fair value gap. However, there is SMT here right now between ES and NQ. So ES actually took out that July 25th high of day. However, NQ did it, and now if we disrespect this 4-hour FEG on NQ, if we disrespect this 4-hour FEG here, then we're most likely gonna have SMT, and we're probably gonna price lower. But what that means, what I mean by disrespect is if we get a closure below this 4-hour FEG. If we don't get a 4-hour closure, then we're just probably wicking it. But like I said already, ES did take out July 25th high of day, so you guys should be aware of that. We don't really have any. We only have London lows as our target for the session. But I don't trade the first 30 minutes of the trading day. So yeah, I'm usually on the sidelines because I don't like that volatility that gets injected. I would wait for I would wait for the 4 hour and the 1 hour and the 8 hour candle closure to base really to see what what the time frames are really wanting to target here. But as of right now, I'm not going to target anything. I'm just going to be on the sidelines. Yeah. A freaking morning. But yeah, we have about like 6 minutes left till the open, so I'm just gonna be watching and seeing how prices trade here, because like I said, I want to see us respect this 4 hour FEG if we are bullish. If we are bullish, then we should hold this 4 hour FEG. But if we disrespect the 4 hour FEG, then that would mean that we are going to go lower, and this high becomes a strong high because there's SMT between it, between ES and NQ. No? It's not the blue. Oh. But yeah, like I said, I want to see us hold this 4 hour FEG. Alright, IQ, if we are bullish. I'm gonna wait and see how the 4 hour closes before I would pick any sides right now. But yeah, we still have about 4 minutes left till the open, and let's see what the opening volatility brings us on a Monday morning. I sacrificed one piece so I can be up tempo. That was actually a really nice move, actually. So there is the New York AM Open. Like I said, I don't usually trade the first 30 minutes, so I'm not gonna worry about too much about what we do here, but it does give me insight on what we on what like the first 30 minutes would do. Have this so he has to go here and then this guy's lucky screwed. This should be checkmate. Dude, that was a good game though. That was a good game. I think I had like a brilliant move. I had a great move. Okay. Not a bad game. Now I'm up tempo. Oh, I missed checkmate in one. All right, so what an interesting start. Okay, so we have here on ES, we took out London lows on ES. However, on NQ we didn't, and it looks like we are retracing back inside this 15-minute fair value gap here on NQ. So pay attention to how we treat that. But yeah, so notice how we took out Asia's highs and lows, right? We took out London highs, and then if we take out London lows, that's gonna be lower probability conditions here on NQ, just because of like we don't really have any session liquidities to attack, and we're kind of out of sync right now. So NQ is now pricing higher, while YM and ES are still bearish. So that's a little bit, I'm now hesitant because there's some sort of SMT, some sort of manipulation in between these markets right now. Well, like I said, I'm gonna wait about another 20 more minutes until 20 minutes until the closure, until the 4-hour and 8-hour candle closure, and I would then decide what to do there. I'm gonna do another chess game, and then yeah. What if I just did that? Okay, so it looks like on NQ we are pricing higher. This tends to be the case during a Monday morning. Usually during mornings as well, is when we can start seeing, you know, that like this is gonna occur. Is one, you know, one market's gonna be going higher while the other is gonna be like trading lower. It's really weird. Bruh. This guy's gonna auto abort. Does not qualify for points. That or doesn't. Shouldn't. I don't like that, so I'm gonna go here. I'm gonna go here. Oh wow, what an aggressive player. What an aggressive player. Player D. Player D. Player D. Get my pieces off out the board here. I go here. I'm gonna go here and then here. Brother. Kick this guy out. Or I go here and then develop with my bishop. Just developing my pieces here. I'm not gonna attack any of his. Okay. Interesting move. I'll go here now. Take control of here. Probably open up my so I go there. He probably takes again, and then we go here and he takes. That's open. So I'll just let him take actually. I'll let him take, because really no point in me taking. He really wants to get this knight, it appears. So look at NQ right now. NQ is about to take the 830 high while ES is nowhere near it. It's just interesting. Very, very awkward market conditions. I think if I take this bishop, I think I'm actually winning in points here, actually. Yeah, I think I actually was winning in points here. Now I can connect these pieces here. I feel like he's gonna go here actually, and then he's gonna kick out my knight. Okay. I'm actually gonna do this so I can prevent that at least. I got bamboozled. I got bamboozled. And now you just kick this thing here. So NQ took out the 830 highs. ES is nowhere near it. This is clear, you know, something's happening within these markets right now. And I'm not really a big fan of. Look, I got this bishop first here. Okay. This guy seems like he really wants my continue to attack it. Spam the forward pressure. This is a free pawn. Yeah, this is a free. Okay, so he takes, I take. Actually, I'm gonna go. No, I actually could go there. Tag that. Is there a better move? I go here, preventing him to go here, and then I go here. Would that be checkmate? No, he can just go there. Well, I'm gonna take over these squares now. Oh, he doesn't want to let me go there. Get this attack on. Oh shoot! Wait, what? How did I not see that? That's a blunder. Oh, that was a huge blunder. That's a blunder. I did not see that. How did I not see that? Jeez. Jeez. So there's SMT here. There's SMT there, right? There's also SMT here. There's SMT there. There's also SMT between this high. Super, just this. It is bad market conditions. These market conditions are one heck of market conditions. I would not trade anything here. This is terrible. This is just straight booty. We have 7 minutes left till the 4-hour closure and the 1 hourly closure as well. So, yeah, I'll just watch prices from there. Oh my goodness. Oh my goodness. Look at this price action, fam. This is no good price action. No good. No. Ja. One thing that you can at least come to a conclusion with is, based on this 4-hour candle closure, we can anticipate for us to take out that 4-hour candle high and this hourly closures and this hourly high as well. But the markets are like super out of sync right now, so I would rather not force anything and just sit on the sidelines, because what PD array am I gonna use to target their highs, right? Do I have any confluences on the lower time frame? Well, we closed below this, or we closed above this inversion, and we also closed above this one too. But is that enough confluences? Is there displacement on the side of the bulls? No displacement whatsoever. We don't have, let's check the 1 minute. Even on the 1 minute, there's not clear displacement. There's this fair value gap here. There's this 1 minute fair value gap, but did we respect it? No. We closed below it, and yeah. It's not willing. It doesn't have that willingness to attack July 25th high. Keep in note this midnight open too, by the way. This is the daily candle, but with the midnight open. So here we're about to get the 10 o'clock closure in about, or not the 10 o'clock closure, 10 o'clock open at least, in about like 1 minute and 30 seconds. Pay attention to how we close on the 4-hour, 1 hour and 30 minute and 15 minute. It's gonna tell us a lot about whether we're gonna attack the high or the low. Like I said before, based on the power of 3, just looking at it, I can anticipate for the high to be taken, but that's not a trade model by itself. You can't enter because it looks like we're gonna take out the high. You need confluences. Like, is there like supporting PD arrays on the lower time frame? Are we closing? Are we disrespecting the opposing fair value gaps? That's what I mean. Well, there's SMT here, but look at where ES is. And it looks like we're gonna fill in. It looks like we're gonna tap into the consequent encroachment of the weekly SIBI. So look at that. But yeah, on the sidelines right now. There's no need for me to force a single thing. And I would just watch. Just watch price action. Nothing wrong with just watching price action. Like I said, there's no news today at all. So if there's no news, right, and you're thinking of this as power of 3, what do we tend to do during the open, right? There's accumulation, right? There's the accumulation, and then there's going to be that manipulation into the distribution. So, like I said before, now that we got that 4-hour candle closure, based on how we closed on the 4-hour, the 1 hour, 30 minute, and the 15 minute, we can anticipate for us to take out their respective highs, right? So now that we've taken out the 4-hour high, the 1 hour high, the 30 minute high, and the 15 minute high, you're probably wondering, why didn't you take that trade then? Like, why didn't you, if you knew we're gonna take out that high, that 4-hour high, why didn't you take it? I know in trading, you can anticipate. You never know. Nothing's ever completely clear. And like I said, there's no PD arrays for you to enter off of. There's not a reason for you to enter there. You just have that layout, but you need the details. You need the it's like creating a burger. You have the layout. You still need the meat. You still need the you need the patty. You still need the lettuce. You still need the tomatoes. You still need whatever sauces that you put on your burger. All you have right there, just based on the power of 3, is the layout. All you have is the bread, the buns. You don't want to eat a burger with just the buns. You still need the other recipes, like the patty and the tomatoes and the lettuce and the sauce. But yeah, there's that objective being taken. Like I said, I still want to see us take out July 25th's high of day. Whether NQ would give us an entry for that or not will be up to NQ. But for right now, just watching. You're simply an observer. Simply just an observer of the markets. You sure I'm gonna repeat it?
Yeah.
Ba-dum. Dun-dun. Dun-dun-dun-dun-dun. Dun-dun-dun-dun-dun. Dun-dun. Dun-dun-dun-dun-dun. Dun-dun-dun-dun. Dun-dun. So let's just see, and like you said, I've now noticed that we have about 3 higher time frame closures on during the New York session. We have the 8-hour closure that happens during 10 a.m. EST, Eastern Time. We have the 6-hour closure during 12 p.m. EST, and we have the 10-hour closure at 2 p.m. EST. So if you're trading, power of 3 models, you can wait for those certain time frames there, and then you can then formulate a higher time frame, with the higher time frame draw or whatnot. But just something I've came to conclusion of. Excuse me. But let's just nah, there's no need to touch up on that. Boom 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 boom. And yeah, just watch price action for here now. There's no reason for you to chase here. I do want to note out the opening price though, so let's get that 4-hour opening price here. It do.
No,
It do.
no, there isn't.
Come on, let me show you. It appears like we are selling off now. On NQ at least, but let's see how we close here. We still have London lows intact, so I would like to, you know, orchestrate or like come up with a plan that can target London lows. But that depends on if the market will give me something to base my trade off of. It appears like ES is also selling off too. Yeah, selling up on ES. And like I said, I would try to come up with a plan here to target London lows, but that depends on if there's going to be a trade setup that prices allows me to enter it off of. If there's not, then there's not really a reason for me to chase anything here. Like this could be a model right here. That right there could be a model. But it depends on if we actually retrace all the way up to here or not. And we didn't. And see, we took out that 15-minute low. So there's that low get taken. No model to enter off of. You're probably wondering, why didn't you take the entry at 9:14? Well, the candle didn't close it yet. So we're just waiting and waiting. This is interesting because I'm like, what the heck is happening? Well, I mean, so let's take a look at all the information I can take in right now. Let's start off at the 8-hour time frame. On the 8-hour, we have already taken out that 8-hour objective now. Now it is up for us to see what we're gonna do on the 10-hour. So the 10-hour closes in about 3 hours and 40 minutes. 6-hour closes in about an hour and 38 minutes. On the daily time frame right now, on the daily time frame, it's actually too early to call because we still have 6 hours left to the closure. So I'm not gonna choose a side here, but yeah, I want to see us continue to hold this 4-hour FEG if we're bullish, and this 4-hour FEG will help us attack July 25th high of day. So us respecting the 4-hour FEG right now is good. Like I said, we could wick outside of this 4-hour, which is why you could target London lows. But if we get an actual 4-hour candle closure below this 4-hour FEG, then I would say that that's complete disrespect. But the fact that we even traded down past the consequent encroachment is already enough for me to say we're not as bullish. But yeah, because I mean, look on the like higher time frame here. On the higher time frame, we're bearish. Like I said in my weekly analysis, I want to see NQ take out previous week's low, so I can anticipate for prices to take out previous week's low. And like I said, there's reasons why I'm anticipating for that. I'm anticipating this fair value gap, this weekly fair value gap, to be a breakaway gap. I'm anticipating for us to retrace into this daily fair value gap and treat it as a resistance level. We closed below a weekly BISI, so now it turns into a weekly inversion fair value gap. So all of those signs are telling me that, hey, we're bearish. So on the higher time frame, like the weekly and daily time frame, we are most likely going to see lower prices. But on the lower time frames, that's when you can tell that's when you can say this is when we're going to go lower. The lower time frames are used to really pinpoint and get your accurate entries. But yeah, there's that. What else do I want to talk about here? Not much, to be honest. Just a lot of speculating and price watching. So I do want to go over the risk management plan here for today. So if I were to take a enter trade, these would be the guidelines that I'm gonna follow. So today I'm gonna be choosing to trade with a normal position sizing. My first ever trade, if I do take one today, will be these, according to this here. A 1-to-1 risk to reward trade, for the first trade at least, will be $480 as my maximum stop loss. My maximum stop loss, if it's a 1 to 1.5 or higher risk to reward, is a $720 maximum stop loss. And let's say, you know, I win my first trade, right? And I'm gonna take it a second trade. Then I would trade only half of the profits I gained from my first trade. So let's say I won 500 in my first trade, right? In my second trade, I'm risking a half of that, so I'm gonna be risking $250 of my maximum stop loss. And let's say I lose my first trade. $240 will be my maximum stop loss if it's a 1-to-1 risk to reward, and if it's a 1 to 1.5 or higher risk to reward, then it'll be $320 as my maximum stop loss. And let's say I win my second trade too, right? You know, I win about $260. I'm gonna only be risking a half of that for my third trade, so I'll risk $130 as my maximum stop loss for my third trade if I won my second trade. And that, like I said, it depends on how much I gain on my second trade. And if I lose my second trade, $120 will be my maximum stop loss if it's a 1-to-1 risk to reward, and if it's a 1 to 1.5 or higher risk to reward, then I'll be risking $160, and that will be my maximum stop loss. The other rules that I do have for myself is that I'm not going to be taking any models that is below a 1-to-1 risk to reward ratio. So I'm not going to take a 0.5 to 1 risk to reward. That makes no sense. So I'm going to try to make $1 and I'm risking $2. That makes no sense there. And my risk to reward should be set to where I take my first partial, and not where it's not going to be set at where I take my terminus. So my terminus is where I believe the trade can go. That's like the full extension of the move, but I'm not going to be trading the full extension. I'm going to be I'm going to take partials at according to what the markets give me. So, and I tend to take my first partial at like the 15-minute power of 3, but if the 15-minute power of 3 is in confluence with the 4-hour power of 3, then, you know, my terminus would be 4-hour low maybe, and then I'll take my first partial at that 15-minute low, and that 15-minute low is where I set my risk to reward, not the 4-hour low. That's just an example. And when I do take a partial here, I'm going to be taking half of the position size off when I take my first partial, and then I move my stops to break even. So here's an example of that. So let's say I have an original position size of 20, right? And prices hits my partial. So I will take off 10 micros off at the first partial, and then I'm going to move my stop loss to break even. The next take profit target that I have, I'll take off 5. So I'm just slowly taking off half until I hit my terminus. The terminus, I'm just closing the entire trade, and then it's set and done. And that concludes the risk management part of the stream. I've completed what I did want to do 2 weeks prior trades, so I'm gonna go over July's trading, second week of July, I believe. Trading week. So let's see where it's at. Here, I'll be going over these trades here. Oh, actually, I just went over that. So let's go over it. Let's go over this one, July 15th to July 19th. So coming into this day, I remember this trade. So I was anticipating for us, coming into today, I wanted to see how prices would treat the 1-hour fair value gap. What I'm talking about is this larger, 1-hour SIBI right here. And I wanted to see if we respect it and go continue lower, or will we disrespect it and continue higher? So we disrespected it. We closed above the 1 hour FEG, right? So that's already a sign of, hey, we're bullish. I have a higher time frame draw of liquidity here, so it's clear now to me that we're going to take out previous day high, right? So now I'm going to go onto the lower time frames and base my trade off of the 15-minute model. So on the 15-minute time frame, I can anticipate, right, for us to take out this candle's high, and we created a fair value gap here too. This fair value gap, I'm anticipating it for it to be a breakaway gap, even on the 30-minute as well. So I'm anticipating that 30-minute fair value gap to be a breakaway gap, and that 15-minute fair value gap to be a breakaway gap. Reason being is the way we closed. I explained more about that on my fair value gap video, but yeah, just the basic summary is that just look at how we closed. And another confluence for this trade is that the 1 hour, 30-minute, and 15-minute, they both have the same, or they all have the same highs. So they all have the same objective, which is the second aspect of my time frame alignment concept. So they have the same objective, right? I'm anticipating for us to leave this low intact because it's a breakaway gap. So I'm going to go on to the even lower time frames to find a fair value gap that we could retrace into to help us attack previous day high and that 15-minute high. So there's a 5-minute fair value gap that gets created here. And I'm going to take my entry based off of this 5-minute fair value gap. My entry is at the 11 o'clock open. So we actually opened at 11 o'clock. We created the low and we expanded. And after we take out previous day high, I set standard deviations. Okay, how high can we get? Because we're actually super relatively close to previous day high already. So I target the -2 standard deviation as my final terminus, and we ended up attacking it. What is the other thing I did want to what is the other thing I do want to talk about? Oh, let's just continue to go. So that was the very first trade of that trading week. On Tuesday, I noticed, hey, I was anticipating for us to take out Asia's highs before the 10 o'clock open. After we take out Asia's highs, I wanted to see how we would trade there. So we took out Asia's highs here. We swept it. This is a sweep because look, we took it, and then look at how, pay attention to how we closed here. This is very bearish. We took it and we created a bearish power of 3, and the 4 hour, the hourly, the 30-minute, and the 15-minute, we all have the same low. We all have the same objective. And like I said, whenever we have the same objective, that just means there's time frame alignment. That means every single time frame have the same objective. That means we should get it there. We should accomplish that objective then. So on the lower time frames, I'm gonna find an entry pattern to help us target that 15-minute, that 30-minute, that 1 minute, or 15-minute, 30-minute, 1 hour, and 4 hour low. So there's a 2-minute fair value gap that prices retraces back into, and we attack that 15-minute low, and notice how we still had London lows intact here. So that's a solid trade there. It's a one-to-one risk to reward, but like I said, I would have taken that because it follows my setup. The second Tuesday trade here actually is based off of the 15-minute and 30-minute power of 3. We had the same objective on both time frames. We still had lunch highs intact, and notice how prices aren't really trading in one direction. We are in a consolidative state, so I did not want to trade large expansions, just sticking to lower time frame models. Alright, so this is that 15-minute high, that 30-minute high, and we're targeting lunch highs here. Alright, so yeah, I'm basing my trade off this one on the 15-minute and 30-minute high. There is a 5-minute fair value gap here that gets created, and that would have been where my entry was. So I actually here I took my entries, or I placed my entry at the 2 o'clock open because it was within the 5-minute fair value gap, and I always want to be buying below the open, right? So I had my entry, or my limit order set there. However, we didn't actually get a retrace back inside the 2 o'clock open. So prices kind of left without us. What I could have done better was actually had my entries set at the 5-minute fair value gap high, and had my partial taken off at lunch highs, or just taken off the entire trade at lunch highs, and that would have allowed, you know, the risk to reward would be the same, but I would have taken like less position sizing. And yeah, that was my Tuesday trade. Wednesday, coming into the morning, I was bearish. We displaced lower during the London session, and we took out previous day low and previous week's low. This meant we already took out the higher time frame objective. So with the higher time frame objective being taken already, I was only going to trade the lower time frame models. I waited until prices would retrace back inside the 15-minute fair value gap to see if we can get a bearish reaction to it. We did displace lower on the 5-minute time frame, but we didn't get an entry. So I remember this trade. We had this 15-minute fair value gap, right? I remember I stated in the stream where we had only 3 options, or really 3 things that prices could do. Is we retrace into the 15-minute fair value gap and instantly take out that 30-minute and 15-minute low, and not giving us an entry. The second option is that we do retrace back inside the 15-minute fair value gap, we respect it, and we get a setup to occur. That's the model, or that's the option that I wanted prices to do, but it didn't give it to me, so I'm not going to take it. And the third option was we disrespect the 15-minute fair value gap and we close above it. That was the third option. So what played out was actually the first option. So we took out the 15-minute. We disrespected we respected the 15-minute fair value gap. We displaced lower in the 5-minute time frame. My entry would have been at this 5-minute fair value gap here. However, prices didn't close yet on the hourly candle. We didn't close yet on the 15-minute candle. We retraced back inside this 5-minute fair value gap here, and I didn't enter because we didn't close yet, and we didn't open up yet at 11. So I was waiting for us to open at 11, wick into the 5-minute fair value gap, and then take out that 15, 30-minute, and 1 hour low. We didn't do that, and yeah, prices just ran without us. That's completely fine. Wednesday. So it's the same day. This trade would have been based off of the oh wow. Rebalance this 30-minute fair value gap. So I guess I'm targeting this rebalance here, and I'm basing my trade off of this 15-minute and 30-minute power of 3. So we have the same objective on both the 15 and 30-minute. Here we have a 5-minute fair value gap, and prices actually retraces back into it, and I took an entry at the 5-minute fair value gap, and we get stopped out. That's fine. I feel like this is a trade that I would have taken every single time too, because I have an objective. But yeah. Alright, so Friday coming to Friday. Let's just take a look at what happens here. Notice how we closed here at the 15-minute candle. Bearish power of 3. We did not close below the 15-minute fair value gap, so we respected a 15-minute fair value gap here, and we had a bearish power of 3. So I know why we created it. There's a 4-minute fair value gap that prices creates. I remember this one. I took the entry based off the 3-minute model, and I didn't allow prices to retrace. Like, I should have taken into account that this is based off, like, I should have based my entry off of the 4-minute fair value gap, not the 3-minute, because higher time frame holds higher power. And yeah, I ended up getting stopped out here. So what I could have done better this trade was actually follow higher time frame narrative, or not use higher time frame PD arrays instead of using a time frame below it. So it's, you know, it was a good setup, but just poor execution. So let's rate these trades here so I can actually know which ones I've already gone over. So this is a plus setup. That is a plus setup. This one is also an A plus setup. See what this one was. 15-minute high. So I'll give this one like an A minus because it is a consolidation model. This one is an A plus setup, just no entry. Okay. This one, I'm giving this one, I would give this one an A minus as well. Friday, I would give this one an A setup. This is an A setup. We did, like I said, we did have a bearish like power of 3, but it wasn't clean how we respected the 15-minute fair value gap. We like respected it, but we didn't we traded outside of it. So I'll give it an A minus setup. Alright, so I've completed that. So whenever I do those recaps, just reviewing my trades, that gives me a lot of confidence, and you know, it gives me that like confidence boost, and really allows for just good I'll take this one here actually. Just based on this 15-minute power of 3, I can anticipate for us to take out this 15-minute high. And we already had that retrace back inside it, so I kind of missed it. Yeah, I kind of missed it there. I missed that entry. Kind of sucks, but that would have been the entry there. And let's see how much I would have been risking. So I'm gonna risk 720, right? Because I'm trading aggressive, a little bit more aggressive here. Okay, that would have been the entry and stop loss too. It's a 1.63. and missed that entry. It's completely fine. Yikes. Yikers. I wasn't prepared. Mid talk. Oh my goodness, I was watching on my other screen too. That sucks. So the reason why I could have entered this trade is because of the 3-minute fair value gap. We had a supporting, PD rate on the 3-minute, and that supports the idea of us taking out that 15-minute high. Like I said, kind of unfortunate that we didn't get the entry there, but let's just say I was in that trade there, right? I would have moved my stops to break even by now, so my stops would have been there, and I would have taken off 27. So 27, I would have taken off like 14 contracts there, and the rest I just moved to and the rest I would have used like maybe standard deviation projections, because we are, like I said, we're in pretty weird state right now, so really consolidative markets. This would have been maybe an like an A minus setup, not even an A or an A plus. This is an A minus. The reason why is we had respect to this consequent encroachment. I noticed that. That's the first thing I noticed, that we respected the consequent encroachment of the 4-hour fair value gap. We created a 15-minute power of 3, but we don't have confluence with the 30-minute time frame. So there's only we have confluence. We only have there's no time frame alignment in this trade, so that's why I would rate it an A minus. But like I said, it's not a bad setup, but I feel like because it was like, if I was to take this on an eval, I would have taken this on an eval, but like if it's like an actual funded account, I don't think I would have taken it. But yeah. See how long have I been streaming for? So about an hour and 30 minutes. I'll give prices like another 10 minutes, and if we don't get any setups, I'm gonna just turn off the charts. So some people I feel like would have taken that entry right there, because they probably saw like a large displacement and probably targeting London lows here now. Let me just mark that out as London low. Yeah, some people probably, I feel like, would have taken this entry here. That would have been the entry. But I don't trade those models. Candles haven't closed yet. I don't like taking them. Okay. So let's take a look at a 10-minute. No. It looks like we might actually take out London lows before even getting an entry. So yeah, let's let's not force anything here. We have like 2 minutes left, and I don't really think we're going to do something like retrace all the way back up into this fair value gap again. So let's not do that. Let's not take that entry. There's really no need to chase the move, as long as I can, anticipate it. And look at that. So we took out London lows. Here's the 11 o'clock open here. So I'm gonna note that. There's a 11 o'clock open. And do we have any other targets here? We have new week opening gap. Whoops, I did not mean to do that. I meant to use the standard deviation projections. So we have -1. So we have that -1.5, -2, and -2.5. So use those as targets if you're in this trade here. But yeah. I would have liked to just watch price action here, to be honest. I really don't want to force anything, but yeah. Alright, I'm actually gonna close this, just turn off the stream here because London lows has already been taken. No entry there. We were able to highlight out a trade. I need to be more attentive. I should have entered this trade here. But yeah, I forgot what I was even doing, and I think I was kind of busy talking